welcome back. Today we just wanted to cover some markets and really go through what is happening because it's been a very volatile year. You just wrote a piece that came out this week, so tell us a little bit more about what's going on.
Yeah, certainly. Welcome to March. If you're in the bluegrass, the weather changes like the market, right?
Yeah.
75 degrees and sunny the other day. Now it's 40 degrees and raining, and we're expecting a tornado. And so, did put out that piece. If you haven't had a chance to check that out, that is on the website. You can see that, Jewel Financial, or just check your inbox. The two purposes of that piece, one was a little deep dive for those of you that are interested in the finance terms that we kind of throw around out here, which is the S&P 500 and the market cap weighting of that. One of the things that we are really subscribing to, and I'm really excited about it. It makes perfect sense, and it's something that we haven't seen in a very long time, and that is the stocks that got us here are not going to be the stocks that take us there. What I mean by that is the S&P 500, when somebody says the market, how'd the market do? What's the market doing? How'd you do compared to the market? The market that they're referring to is the S&P 500. Yeah. Now, most people out there listening, you might actually think that you're referring to the Dow. Mm-hmm. And
I think a lot of time people speak in the daily of
correct.
The Dow.
Yeah. No question. But when you talk about when pundits or performance or someone says this is what the market's doing, they're always referring to the S&P 500. So that's the benchmark. That's what's historically done so well. Best performing asset class in history. It's mathematics. You can't argue with it. It's better than real estate, better than treasuries, better than cash. So ultimately, the market, which is the S&P 500, comprised of 11 sectors, 500 stocks. One would assume, this isn't dangers of assumptions, right? One would assume that you, if invested in this S&P 500, you get 1/500th of every stock. That would make sense, right? Okay, you put your money in, you get 1/500th of Google, you get 1/500th of, Chevron, okay, energy, tech, whatever. That's not the case, not even close. What happens is, as a company becomes more valuable, and when I say valuable, I mean market cap, price times shares outstanding, it's the total market capitalization, they actually take up a greater weighting inside the S&P 500. Now, it doesn't just happen with the individual stock. It happens with also the sector by nature of those stocks. So if a stock is getting bigger and bigger and bigger, naturally the sector weighting is getting bigger and bigger and bigger as well. Most people have heard the terminology FANG. You've heard that acronym, FANG. It stood originally for Facebook, Amazon, Apple, Netflix, and Google, FAAN and G. Now, a lot of those names, ironically, have changed. So Facebook is now Meta, right? The symbol used to be FB, is now Meta, M-E-T-A. Apple and Amazon are the same. Netflix actually fell out of favor considerably, and Google became Alphabet. So those things are kind of out. But what has happened is over the last decade, prior to 2022, and the decline in 2022 was primarily a result of this, those 5 stocks made up the majority of the S&P 500. Well, more than half, okay? And therefore, their performance really led the S&P 500. So 2 things happened, Logan. The first thing that happened is that everybody, the collective investment world, moved into passive index funds. Right? This idea, why try to beat the market? Just own the market, okay? But by doing that, they were thinking they were diversified. The reality is they weren't. They were owning 5 stocks.
Right.
Now, here's what's happening, and I love it. Those 5 stocks are falling out of favor. Why is that happening? A lot of it, is Amazon going to go anywhere? No. Is Google going to go anywhere? No. These are companies that are going to be around forever. They have billions of dollars in cash. They're doing exceptionally well. But it's almost impossible to grow at the same rate that they were growing at because of their size.
Yeah.
I love to run, and I might improve on my running, but at a certain point, I'm not going to keep improving. Like, you hit a level, and you're like, I can't go below that level. It's not going to happen. These are trillion-dollar companies.
Mm-hmm.
The idea that they're going to keep growing exponentially at that size is not possible. What's happening? They're falling out of favor. New companies, most of which many people have never heard of, also what I love, right? Because what do we do? What do I spend all of my days
You
doing?
look into these companies.
I love them. I mean, it's like digging for just gold. It's awesome. They're starting to emerge. They're starting to emerge, and they might be in different industries. Many of them are. They might be doing different things altogether, but they're not the traditional names.
And they're in the S&P 500, these names
Many
you're
of which
talking
are.
about. Many
Some of
wh-
them are
yeah,
not, but many of which are.
But they
they're
just don't make a difference,
They're
right?
infinitesimally small, super, super small. And so what's happening is, for all intents and purposes right now, the economy's good. I don't care what anybody says. We have low unemployment. Consumer spending is healthy. Yes, there are some problem signs. No question about it. But there's always problem signs. That was the second point of my article. I haven't been in this business when there wasn't problem signs. If it's not domestic, it's international. It's everywhere. Soon it'll be space probably. Who knows? Point is, while we go through these economic situations, but all intents and purposes, things are good. People are spending money. They have jobs. Two most important things. Companies are shifting. Those companies are coming out of favor. New companies are coming in favor. The S&P, or the general market, has been relatively stagnant, which makes sense. Bigger companies pulling back, new companies that don't have as much weighting improving. In addition, other sectors and other areas of the market, small capitalized stocks, emerging markets, all of a sudden, guess what? Remember that emerging market that we talked about a year ago? Unfortunately, got stopped out of some of the position, re-entered. Now, all of a sudden, it's one of the best performers in the market.
Right.
So what's happening out there is it's not just a market of stocks or a stock market. It's a market of stocks, and you have to do your homework. I love it because when we're looking at portfolios of people, we're saying, okay, I don't care if they're a passive client or they're private or they're a dividend model, whatever it may be. We're not just taking the machete, right? We're not just taking chop, 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 or buy the index and set it and forget it. No, you have to be precise and have precision with what's out there. So I'm here to tell you, yes, the market as a whole, there's areas that are going to struggle. They just are. I can tell you right now that energy probably doesn't do what it did last year. Large cap tech that is struggling to deal with high input costs, inflationary pressures, shipping costs in Amazon's case, they're going to struggle. They're laying off people. They're going to struggle. But newer companies that are, I'm not going to mention names because I think that would be inappropriate. I've mentioned them before so people can go back. But newer companies that are involved in different areas, whether it's getting tax incentives from the government or whether it's just a new incentivized place that, people are using more of or shopping more at or whatever it may be, they're emerging and they're the new leaders. Logan, we haven't seen this since 2000. In 2002, when Amazon emerged, they just sold books.
Yeah.
Anybody can look back now and go, why didn't we just buy Amazon? That's a no-brainer. No, it wasn't. It was not. They sold books.
Right.
And everybody, Jeff Bezos, come on. This guy's not, you're going to tell me this company's going to live just selling books? He had a vision. It was grander than selling books, and it became one of the most valuable companies in the world. My personal opinion, just my opinion, that's what's happening today. There's opportunity out there. I love it. I'm very excited about it.
Yeah, and kind of the long-term trajectory is eventually these companies that we're seeing under the surface of the S&P 500 will be the new leaders that grow the S&P 500 over time. So we're not saying the S&P is going to be the worst outcome 10 years from now, but right now there's a transition going on, so you have to be a little bit more intentional about what you're doing in portfolios.
I totally agree. I also think there's names that people that know of that already are somewhat leaders. Tesla, I think, will continue to be a leader. That was not in the FANG. It now is one of the most valuable companies in the world. It's pulled back. I do think it's still a leader. So there are still companies that are there that are going to lead. It's not like the S&P is going to stink, but I do think that there's opportunities to provide additional value that we haven't seen in a long time. I just don't think it's as black and white as people want to make it. I think if you're in the camp that, oh, things are bad and I'm not interested, or you're in the camp that things are great and I'm interested, it's not as black and white. I think there's going to be bad, and I think there's going to be good. In the middle is opportunity. That's what we're looking for.
Great. Anything else you want to add?
At some point in time, the fear that we see that is pervasive out there, that's another thing that,
whether it's recession or it's the economy,
that's another thing that keeps me optimistic, is that, no longer, like a couple of years ago, are people going, hey, should I take more risk? They're like, why would I invest? At some point, that will shift again. I don't know when. Doesn't seem like it will ever shift right now, right?
No.
Could you imagine somebody being like, let's go?
No.
Yeah, but it will shift again. And it's when you feel comfortable, like, oh, this is great. That's when I'll probably come back to you and go, okay, now we're going to pull back. It's the counterintuitive process of investing. And that's hard. That's very difficult. Not a lot of people get that. We've done it now. We've articulated it. We've written about it. It's hard to do, but right now in this uncomfortable state is where the opportunity lies. They're not going to be there forever. Anyways.
I like it. Okay, great. Well, have a great rest of your week. Stay safe out there with the weather and everything that's going on. Have a good one.